Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope you guys all had a great Monday. As yesterday we saw a little bit of what I would consider a breakout day in the equities, followed by some pullback in the overnight market. So what is that giving us? That, to me, that's giving us a bit more of a consolidation on a slightly larger time frame. So what we're going to do today is we're going to take a look at what the four major markets are telling us today, S&P, Nasdaq, crude oil, and gold, and then we're going to take a look at some stocks of the day. But if you're new to the channel, make sure you hit the subscribe button, hit the notification bell, leave a like if you would, and then also down below in the comment box down below, what stock do you want to see me talk about tomorrow? I think that always helps. If you type in a stock that's interesting to you, we'll take a look at it. Maybe we'll use yours tomorrow. So let's go ahead and get started today with the big picture. Okay, so looking at the big picture, we're going to start with the S&P. And yesterday in the S&P, we were talking about the fact that we were chopping sideways and anticipated a breakout above this 3860 region. And we did get a pretty good breakout. That breakout went for about 20-something points until coming into this well, I guess I wouldn't say little, this 15-minute region. Now, this 15-minute area that we have here was a pretty good level. We're looking essentially at this rally base, very strong drop. And these levels are often very effective. But if you can see, price came into this level. 6 candles later, we had gone nowhere, telling you, okay, probably time to get out of that trade. And the markets did make it up to the next higher supply. So hindsight is always going to be 20/20. And we see that the market did make it up to that next higher level of supply before then selling off from there with a lot of strength, right? A fair amount of strength off of that supply. So what am I looking for today? Well, let's go look at the 4-hour because we're talking about the big picture here. Let's take a real quick gander at what my trend direction is. And so I'm going to use the zigzag indicator. And what the zigzag indicator does is it gives me a turn, and mine is set to 0.5%. But you can see here that we do have, on the most recent amount of swings here, it did put in a bit of an ugly double bottom, if you will. And so when I have something like this, where I have to really think about whether we're in an uptrend or whether we're in a downtrend, in my mind, it's basically sideways, right? And it makes trading that much more difficult. I'm not saying we're not going to trade, because there's going to be trade opportunities and good trades that set themselves up. And so from yesterday's breakout, we do have a little wick over wick area right here. This was from yesterday's breakout move where we did get a pretty nice run. If you made if you were able to catch that trade, do me a favor. Leave it in the comment down below. How did you get in on that breakout trade? How did that trade work out for you? Should have worked out pretty well as it rallied up to the next available target area. But if we pull back this morning, we may get a decent reversal back into this range. So let's look for a reversal back into this area. You might actually still get a candle-to-candle short to take it down to there if you're a little bit more aggressive. Now, in the Nasdaq, we had a confirmation supply area up here, and our confirmation supply area, we did actually have a potential entry, as we did get a potential entry. But, as we moved in 1, 2, 3, 4, 5, 6 candles later, we had gone nowhere, telling us, hey, this thing's probably not going to work for a tradable opportunity. So I'm going to remove these lines as 6 candle rules help us to stay out of trades that we don't think are going to wind up being, some of our best. And so looking at it for today, now this one looks a bit stronger than the S&P. Doesn't have quite the same pullback the S&P does. As a matter of fact, this area here, which was a breakout to the downside, is still available for a breakout to the upside if price does come back into it. If we want to look on a smaller time period and we get a retest back into this region here, you may get an opportunity at that level. But I don't know that that one's as clean as the S&P level. So as far as the Nasdaq goes, I like the breakout trade a bit higher, but I'm going to be a bit more cautious waiting on that one today. Now, crude oil yesterday, looking at crude oil. So crude oil yesterday did have a pretty deep tumble. We did have a 15-minute supply level identified up here. You may or may not have gotten filled off of this little 15-minute supply, as this level was a pretty decent entry because it was a prior area of support. Remember, old support oftentimes becomes new resistance, and if enough people trade that style, that's where you're going to see good opportunities to trade. And we did get a nice touch off of that level and a pretty big move away. Now, unfortunately, so I'm going to leave this level in here. I'm just going to switch it to a confirmation if price comes back into that area. Unfortunately, our demand area down below us on the hourly chart, we did see this wick over wick just absolutely get blown through. This level did not hold and didn't even give us a chance to take a one-to-one or anything out of it. It just completely fell through. So the short worked out really well. The long got a quick stop. And whenever that happens, we need to just assume that we need to start really, really leaning in on the shorts. The shorts are going to be better trade opportunities at this point. And if I go to my 4-hour chart, we'll see that we have definitely put in lower swing lows and lower swing highs. You might even call this a pretty ugly head and shoulders pattern in here that has formed inside of crude oil. So I still think that long-term, right, long-term, to me, oil is still a bit more bullish. I'm still a bit more of a bull long-term and think oil can make it to 70 before summertime. However, I wouldn't be surprised to see us break down and retest some of these areas down here, sub 60 even a little bit. And then gold yesterday. Gold was really the trade of the day from the overnight level that hit and got a very strong move away. We're actually getting another setup right now for a short in gold. So if I get this video out in time, hopefully you can take advantage of this. But this is a perfect setup for a candle-to-candle trade. We have a shooting star reversal candlestick pattern formed at early morning, decent time of the day, just before the pit opened, at a little bit of an unbalanced wick over wick. So I think that here we could see a candle-to-candle short with a move opportunity down from that level. So looking at our big four markets, what do I expect for today? I expect a bit more chop. I expect a bit more chop coming out of today. We did get a rally yesterday on the hope that bond yields would normalize a bit and people were calmed down a little bit. But I think the overnight sell-off has definitely put a little bit more spook in the market. So once again, I wouldn't be anticipating that our uptrend is over, but I think it's okay for us to start to say, you know what, if I'm going to trade stocks, I need to only trade the ones that are the strongest. So let's talk about some of our stocks that are in the news today. So stocks in the news today that we want to talk about are going to be some of our stocks in our strong performing sectors. Now, what are sectors? If we think about the stock in general, the stock market is broken down into different sectors, and those sectors are broken down into industry groups, and those industry groups are broken down into individual stocks. And one that I've been paying attention to are a lot of stocks in the mining sector, basic materials, and the mining, specifically the mining industry group. So a couple of them today for us to pay attention to. I'm going to start with Rio Tinto. So looking here at Rio Tinto, and I'm going to go to a 1-year daily chart. If we look at what Rio has done over the course of the past year, it is up 84%, while the actual market itself is only up 26% over the past 12 months. So greatly outperforming the market. The other thing that I take a look at is if I throw my implied volatility range on here, we're at a lower point of our implied volatility range, giving us an opportunity to get long, utilizing options. And you can certainly still do something like a bull call spread for those of you that understand options, or you can potentially just go long on the stock. Now, when I say go long, that means you're a buyer, right? So, but you say, well, Chuck, I don't know that I want to buy it because I feel like it's gone up so high. Well, let's go back and look on a time frame of over, 10-year weekly chart. We are at an all-time high, no doubt. But what's wrong with buying the all-time high, right? And that's one of the things that I tell people a lot is it's okay to buy an all-time high so long as you've got a protective stop in place to get you out. And one of the things I like about where we're reversing here is that we had this old area of resistance, this old all-time high where we had pulled back from. We gapped up above it on pretty strong earnings. we've come back in and retested that area, and now it appears that we're trading a bit higher. Now, this morning in our pre-market, it looks like we're trading at about $90.02 by 90.08. So telling us that we're going to open up a little bit higher, and I think that this is a good opportunity to get long on Rio Tinto. Now, you've got a stop loss probably just below Friday's low, right below this red candlestick's low would be your most aggressive stop loss point. You can certainly be more conservative and wait for price to fill this gap and get long down here. What's the problem with that, you say? Well, the problem with that is, what if you don't get filled, right? What happens if it becomes a level like this? This is an extremely good level that never got retested, right? And if you waited for price to come back here, then you certainly missed out. And so I think the more conservative entry is to look around 82.82, and the more aggressive entry is to get long at the open and place your stop just right below 86.76. Another one in a similar industry group that looks a lot alike is BHP. So BHP Billiton is another one that you can take a look at. Very similar pricing structure is what it looks at. If you want the more conservative approach, you would take the gap fill entry. If you want the more aggressive approach, you would just get long at the open. This one looks like we closed at 78.76. We're going to open right about where we close, so you don't have the gap to contend with. Now, these in their pre-market are basically trading about where they opened, whereas our S&P and our Dow Jones, they're going to be down a little bit at the open. Not a ton, but they're going to be down a little bit. So slightly outperforming those individual stocks are above the market. So hopefully that makes sense for you today. So take a look at those ones. Put those ones on your watch list. BHP and RIO as stocks, I think, to add to your watch list. But if you have any questions, as always, send me an email, support@tradersarmy.com. Until tomorrow, everybody, have a great day. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.